Hey traders, John Howell here, officialjohnhowell.com, and in this video I'm going to talk about how to make money trading penny stocks. So let's get into it. Alright, let's get into it now. Let's actually talk about how to make money trading penny stocks. And before I do start this, obviously trading the market is not easy, okay? It's simple, but it's not easy, and there's a lot of different things that goes into a process, okay? So just make sure you take this as general advice only. I'm not saying buy or sell anything in this video. You need to understand the risk before that, and make sure you get educated and do paper trading before you put any money into any system out there. Make sense? Alright, so let's actually get into this now. Let's actually talk about how to make money trading penny stocks. Now, the first thing I do say is if you're trading penny stocks, like I'm looking at this stock right now, okay? Obviously it's a penny stock, right? You can see it's like 8 cents. How do you make money trading this stock here? Now, there's a few things that I must say. The first thing I must say is that if you are trading penny stocks, it is very, very, very risky. You can double your money really quickly and you can lose your money really quickly. So therefore, if you are trading penny stocks, make sure you are only trading a small amount of money on your trading account. So maybe just say 1% of your entire account goes on one trade. Therefore, if the whole lot goes, you only lost 1%, right? That's just being intelligent about the way you trade penny stocks. Next thing I do say is what you want to do is you want to try and trade a stock that has at least some sort of rhythm to it. You can see this chart here, right? I'm looking at this chart here, and you can see how it's very, very messy. It's very gappy, up and down, up and down. You know, it's at 8 cents right now, and before it's up at 80 cents. Like, wow, look at that! Look how much money you can make. Yeah, you can lose a lot as well too. Makes sense? So that's the first thing I do say. Now, I'm just going to start changing a few stocks, and now you can see the differences from this one here, where it's gappy and it's really ugly, and now you can actually see a bit of a graph flow. Can you see that? You want to be able to trade a stock that you actually can start to see where it's actually flowing. You can actually see the flow of the market. You can see the highs and lows, and as I keep going through here, you can see this one here, it's 12 cents, but it's not really doing much here. This one here is very ugly as well too, very ugly, you can see that. Oh look, we have something that you actually can see it's starting to flow a little bit here. Oh look, and you can see here, right, we're starting to flow a little bit. You can see the flow of the market. And again, I'm just going through a bunch of penny stocks right now, but you actually can see, you want a bit of a flow, you want to be able to read the chart itself, okay? And as I go through these penny stocks here, you can actually see that they're obviously very cheap, but you can see the difference one, right? This one's here is 18 cents, right? But look how messy, look how gappy it is. There's no flow to this market here. You know what I mean? Like it's very hard to read, but if you go to another market, just say for example, we're looking at, I'm just going through them all. There's actually, obviously you need something that you can be able to read, you know what I mean? So I'm just going through them now, and if I just go back up to, say, let's actually go to, where are we here? Alright, so let's just say, for example, this one here, right? We can actually, what we want to try and do is we want to be able to try to read the strength in the overall movement of that, okay? And so what we're trying to do is we're trying to read the actual gauge of that and the gauge of what is happening with that. So if I just bring up my chart through here, and let me just bring this up to this chart through here. You can see, right, by looking at this penny stock through here, it can be as simple as looking at this penny stock and say, okay, cool. If we're below this, this here is a 200 moving average. If we're below that, then we're only looking to go short, meaning we're looking to short the penny stock, if we can short it anyway. If we are looking to buy it, well, then we're looking for some strength, right? By looking at this chart, where would strength be? Strength would be if we start to break above this long-term moving average, right? So if you're looking to buy the penny stock, you at least want to start seeing some strength, right? You want to start seeing the peaks and troughs as well too. If you look at it here, you can start to see that we've had peaks and troughs below this moving average here is the 52, and you can see, right, we've had these peaks and troughs below it. This one here popped back above it, went down, popped back above it, went down, but you can actually see the lower peak, and then it broke down. Makes sense? So if you're going to trade penny stocks, make sure that you're trading something that you can actually use something as a gauge of, is this strong? Don't just buy it down here because it's cheap. Don't do that. You know what I mean? You want to start to see, is it starting to make maybe higher peaks and higher troughs? You know what I mean? And if it is, maybe use the stochastics as a gauge to help you get in. You know what I mean? If you look at this point through here, and you knew you're below the 200, and you're only looking for short signals, where you can see this. Look where the stochastics was here, and look at that. There's a nice sort of shorting point through there. and the stochastics got almost there. There's a nice sort of shorting point through there as well too. So as you can see, right, by using the stochastics and the moving average direction, you can actually get a good direction on where to actually invest. So if the moving averages are pointing down and the market's below the moving averages, well then obviously only look for short signals or don't look to buy it. But if it starts to break above it and the moving averages start to point back up again, then, you know, wait for the market to go back up and then look for, make it run back up, wait for a pullback, and then look for the stochastics to be oversold after the market breaks above these moving averages. Make sense? So anyway, there's a lot more to actually reading charts. There's a lot more to actually trading this and stuff like that. So what I want you to do right now is click on this image up the top here. It's going to give you a free course, 12 videos, 12 hours long. It's got the top 13 trading mistakes. It's got a whole course just on trading, reading the charts, charting techniques. I'll give you a couple of really good trading systems to trade, money management, and so on and so forth. And this is really going to help you if you're looking to actually apply reading charts and applying the technical analysis to charts and have a good trading system, then that's really going to help you out. So click on that image right now, and that's really going to help you out for free. This is John Howell here from officialjohnhowell.com. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.